Hey, good morning. This is Mayor Valensky with Driving Markets. Just a quick caveat, as per usual, on all my videos, anything I say here is an opinion. It's not advice. It's not telling you what to do. If you want to seek advice, you've got to seek independent financial advice or go to someone that is licensed to give you advice. So here we go. Over today and tomorrow, we've got two massive numbers coming out. We've got the consumer price index and we've got the producer price index in the States. The consumer price index will be released by the Fed. That will show food and energy prices, in my opinion, probably going up significantly. The cost of transport, the cost of production, the massive shortages in the marketplace, the huge demand, supply can't keep up, is just pushing prices higher and higher. So I think that is definitely one to watch, and that will give a good indicator of where we're going regarding sentiment on interest rates. Obviously, if the consumer price index is considerably higher or higher than expected, then you could see a big shunt in prospect of interest rates rising, and have an impact obviously on currencies. So pay attention to that, be aware of it. The next index is the producer price index, which is issued by the Labour Department. They issue the producer price index. That is also an absolute main indicator of where we're going in inflation. My opinion is that inflation is only going up, and therefore, in my opinion, I think interest rates are going to go up as well. Even though everyone and all economies are trying to avoid it. Australia, for example, I mentioned before, stated that sooner rather than later they'll raise interest rates. That is significant because Australia is a major Western developed economy, and if they raise interest rates, that would be the first Western developed economy to raise interest rates. Something to pay attention to. Why is that? When interest rates go up, then investors look at risk premium and say, okay, where is the best place to get money? And they look at the dividend return versus interest rate return, and the interest rate return is guaranteed, where dividend return is speculative. So they would probably people would pull out of the stock market, and there could be a drop in world markets if interest rates start to rise. In my opinion, it's just a matter of time before they start to rise. It won't be this side of Christmas. It'll be no doubt in January, February, the pressure will start to come on to the central banks to raise interest rates, and let's see what happens from there. You've got more or less the end of the earnings season, which is drawn to a close. You've got few of the media and streamline TV streaming companies reporting, like Telecent. It'll be a guide as to see where is the streaming going. They are the smaller companies compared to companies like Netflix, but it's the end of the season. The earnings season has been very successful for all of the companies that are reported so far. And you've got, as I said last week, you've got about 82% of companies that have reported well above analysts' expectations. You've got also to look at gold. Gold is very interesting. Gold has jumped on from Friday, went from 1800 up to about 1820. There is natural resistance of gold at about the 1820 level, so you've got to keep an eye on it. However, why is gold going up when the stocks go up, the stock markets go up? Because gold is a defensive stock, and yet if the markets are rising, the appetite is there for investors to buy into the market. Normally they'd sell something like a safety net, which is gold, and they'd buy into stocks. They've bought into stocks, yet gold has gone up as well. That would be an indication only that not everyone is happy with the levels of where they're at in the stock market. There's a nervousness there, and therefore gold has gone up based on that nervousness. But that nervousness has not been borne out yet in the financial markets. But gold's an interesting one. The other one to look at is oil. Oil dropped a little bit last week, down to about $79 a barrel, $79.50, and then jumped back up to $82. My opinion is that oil is going to go to well above $100 a barrel over the next 2 months, 3 months, something like that. Obviously, oil is one of the fundamentals of the underlying indicators of CPI and PPI, because That's what it costs to move stuff around the world, and oil is a major ingredient in many products. So that's what you've got for today. If you need, remember, always only trade with regulated firms. Beware of scammers. I did a video yesterday on scammers. You should share the videos and get it out there as much as possible. I'm the scammer's #1 enemy, but who cares? If you need to get hold of me, contact me on LinkedIn. You can contact me on WhatsApp. You can comment on YouTube. What else have you got? You've got Instagram, Valensky May on Instagram. That's more or less it. Have a good day. Speak to you soon. May Valensky with Driving Markets.